The resource itself, though, is quite a significant. It's 56 million tonnes, which basically provides us with a 40-year life of mine. It's enriched in two critical rare earths, being neodymium and praseodymium.
Hello, welcome to Assay TV. Today, I'm delighted to be joined by Gavin Lockyer, who is the Managing Director of Arafura Resources. Arafura are developing the now shovel-ready Nolans rare earth project in Australia's Northern Territory. Gavin, great to see you here today. Great news, exciting news out from the company. You just signed this MOU. Non-binding agreement so far with Hyundai out of Korea for an offtake, a potential offtake agreement. Before we get to that news, though, can you just sort of set the scene by telling our viewers a little bit about some of the highlights from your Nolans project there, where you've got a DFS, some of the sort of project economics and highlight numbers there?
Sure. Thanks, Leo, and thanks for having me back. Look, we're, as you said, developing the Nolans rare earth project in Central Australia, in the Northern Territory of Australia, just north of Alice Springs. We've been developing this project for quite some time, and as you rightly pointed out, we've completed a feasibility study that was published in February 2019, and we subsequently provided the market an update in 2021. The resource itself, though, is quite a significant. It's 56 million tonnes, which basically provides us with a 40-year life of mine. It's enriched in two critical rare earths, being neodymium and praseodymium, or NdPr for much simpler conversation. We've significantly drilled out this resource, put something like 90 kilometres of drill holes into it. We have a really good understanding of the metallurgy and how it all hangs together. So that was a lot of time and effort in the early stages. We then went through extensive piloting, which basically informed our feasibility studies. I'm pleased to say that the ore body is hosted in apatite, or a phosphate. And what that means is that we can actually extract that phosphate as a byproduct, which gives us a revenue credit. So in terms of the economics of the project, with the phosphoric acid credit, it actually puts us into the lowest cost quartile for OPEX out of many rare earth projects globally, including the Chinese.
Absolutely. And just remind our viewers, neodymium and praseodymium, what are they used for?
Look, NdPr are basically the building blocks of high performance magnets. The chemical symbol for the magnets is NdFeB, or neodymium iron boron, and these are commonly referred to as rare earth magnets, and they're permanent, meaning that they don't lose their magnetism. The importance of these magnets is that compared to a normal ferrite magnet, they're about 10 times stronger and about a third of the size. So when you are putting a magnet into an electric motor, for instance, you can therefore make that motor smaller but also more efficient, which is particularly of interest to the electric vehicle or e-mobility industry, but also offshore wind turbines, which have big magnets in their turbines as well.
Absolutely. And in terms of your company's sort of offtake strategy, what sort of end users, what sort of partners are you looking for?
Yeah, look, our strategy has always been not to go head-to-head with China in any particular way. China dominates this sector and has done for many years. So we've looked more for those countries that aren't necessarily aligned with the Made in China 2025 strategy, and their industries have a critical requirement for NdPr in their manufacturing. So obviously you don't have to be a Rhodes Scholar to work out that that's predominantly where the auto sector is around the world. So Japan, Korea, the EU and the US, but also those countries which have large wind turbine manufacturing businesses. And the reason we're targeting those countries in particular is because they have well-established export credit agencies in place, which are useful in terms of bringing together our debt financing. And so the offtake is extremely closely linked to the debt financing, and those countries with ECAs that have strong links to their industry have been our key targets.
Absolutely. And so Hyundai, this deal this MOU you've just signed with them. Tell us some of the details involved with that.
Yeah, look, Hyundai has recently announced that they want to be one of the leading EV manufacturers globally in the next period of time. And so they've obviously got a requirement for significant expansion of their existing EV platforms, and therefore a requirement for increased volumes of NdPr for the magnets that go into their electric motors. So Arafura's production timetable of being into production by 2024 fits nicely with that expansion program. Hyundai are being very well supported by the Korean government. We have recently signed an MOU also with K-Shaw or Komer, which is the ECA involved in Korea, to assist us with potential debt financing on the back of that Hyundai contract. But the contract itself runs for 7 years. It's currently non-binding, and we're targeting to have that in a more binding form by the end of August.
And so how much of your product would Hyundai be taking?
Yeah, look, that's a good question, because when we first started negotiating with Hyundai, it was for around 1,000 tonnes, and then just as we were about to execute the MOU, they requested if there was an opportunity to expand that. So we've allowed an additional 500 tonnes potentially to be incorporated into that transaction, and we'll work on that volume over the next period of time. But in terms of pricing mechanisms and most of the key terms and conditions, most of that has already been fleshed out.
And in terms of where that fits within your overall production, what's the overall number looking like?
Look, 1,500 tonnes represents about a third of our overall production. When in full production, we will be producing 4,400 tonnes roughly of NdPr oxide per annum. So this is a foundation cornerstone offtake arrangement that we've put in place, and we think it will trigger significant interest from other OEMs globally.
Absolutely. And you're looking outside Korea as well for those, yeah?
Yeah, absolutely. As I said, we have been targeting organisations in Europe and in Japan and in the US. Those markets are particularly vulnerable to their existing supply chain, and really the NdPr or the rare earth magnets supply chain could be really aligned with the semiconductor issue that most of the auto sector is facing at the moment. It's a small value component, but without it, it's the EV just doesn't work.
Absolutely. And in terms of sort of overall global production and projected demand, how are those two sides of the equation stacking up?
I think overall supply has been constrained historically. These projects are quite capital intensive, and most of them are being developed by small market cap companies. And so raising the capital in order to build these plants has been difficult, and investment in the sector has been minimal as well. What we're experiencing here in Australia, however, is the federal government has put in place a range of critical mineral strategies in which it's been allocating funds or pools of capital, which projects like ourselves can tap into. And I'm really pleased to say that we've at the moment got letters of support through 2 government agencies for up to $300 million in long-term debt financing. So, this is all part of our overall funding package. And, you asked the question about demand and supply. Demand's expected to grow relatively almost double out to 2030 from its current levels of about 50,000 tonnes per annum. So the world needs more supply, and in fact the world needs about 10 more Nolans bore resources to come online between now and 2030. So it's an exciting time for the project.
No, absolutely. So what are the timelines next towards sort of starting to be able to ship your NdPr oxide?
Look, our main target for the next 6 months is really to get through FID, or a final investment decision. We're targeting that for the second half of this year, which obviously is not far away. There's a couple of key activities that we're currently working on which will inform that decision. The first is the FEED program, or the front-end engineering and design program, which we commenced in August last year. Should be nearing completion very soon, and that's a pure value-add engineering process, which will inform and allow us to go out for tender for construction. And we're looking to do that in the second part of this year, such that we can get fixed price EPC contracts in place. That will in turn allow us to, I guess, clearly identify the amount of capital that we need to raise. We always have a pretty strong handle on that, given we've done the feasibility study and the market update. But when we're bringing the debt stack together, we want to make sure that that number is not going to move too much. So we're working with financiers at the moment. We've just recently appointed Societe Generale and National Australia Bank as our mandated lead debt arrangers, together with the ECA banks that we're working with in Korea and other jurisdictions. That will pull the debt structuring together by the end of the year, align that with the fixed price EPC contracts, and obviously hope to cement some more binding offtake agreements in place. That will inform the FID decision to go to construction next year. We can start potentially some early work construction this year, which will help take the pressure off the schedule next year. But we're still targeting production by the end of 2024, with first product delivery in 2025.
Definitely exciting times for the company. If there are end users out there who need some materials for their magnets, they can still come to you to sign some offtakes, yeah. And also, you're busy getting the financing packages together and getting your investment decision worked out. But thank you very much for joining us today for this update, Gavin, and best of luck for the year ahead.
Thanks very much.